The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 4th day of March. My pleasure to be here Friday. Fascinating market, absolutely a fascinating market. Let's get to the nitty-gritties, and of course thank you to all our hosts, fabulous hosts. Just really great information we had from 8 o'clock this morning. We'll be going through until Tom O'Brien finishes up the last 2 hours of the day, 3 o'clock to 5. Let's run the numbers. The Dow is up 72 at 17,016. The S&P is up 8 at 2001. The comp index is up 15 at 4722. Fascinating. The VIX is now at 16.16. Really important that the VIX keeps dropping like this to the mid-teens and then maybe lower. But right here in the mid-teens, we have to start getting a little bit cautious. I'll explain why in a moment. Shorter term, that is. Most importantly, the Chapman Wave Chin Gauge has given me a suggestion that there could be, Monday morning, first thing, there could be a slight bout of weakness in the Dow. It's going to be very important to monitor. And here we go. The gold is having it had a fabulous move. It is now up 12 at 12.17. Let me show you something. Gold had reached, I'm a little behind, you'll see. Whoops, wrong one right here. Gold is, I've got it up 12.20. I'm right on cue. Look what happened. It went all the way. It went above the left side high. This is a little unusual in that this pattern usually gives an arch formation, and that arch formation says you can go toward right to. When I say right to, I mean within pennies of the left side high. Or you could go even higher, but not much higher. And that much higher would say that the high in the continuous contract of gold at 1263.90 said, well, maybe the 1265s, but then you would close underneath that left side high. So this is actually a very important moment. I wonder if I got the 120 hours, 120-minute chart. Let me just move this out the way. I've got it at a potential peak F in the 120-minute chart. I would not be surprised to see if gold pulls back a little bit here. But most importantly, this particular pattern usually says that a time period shorter than the one you're looking at should make an inside buy signal to buy mode in the Chapman wave that goes to at least a peak D, and that should go to the left side highs. So now what we're looking at is the weekly chart has an 86% stochastic, and the MACD is really strong. It says, yes, you could pull back, but then that 200-period exponential moving average around about 1262, that's going to be both a magnet and a little bit of a repellent for at least a couple of days. Okay, that's the way I'm looking at it. And if I'm looking at the monthly gold, this is a single leg A, held above the 200-period moving average. Remember, for months and months and months, I was saying that the gold, my target, years actually, was the 200-period exponential moving average. We did not get to it in the gold contract itself, and we just missed it in the GLD. Went to a low of 100.23 in December. Can you believe 100.23? We're now 20% higher at 121.33. This is the best move we've seen in gold as a single leg A up in a very long time. Look, it even beats that move. No, maybe it doesn't. 1114.68 to 1136. Hey, wait a minute. That's 22 points. Yeah, they're about the same. We're going to see what happens after it. But remember, that was when the MACD and stochastic on their way down. Now in the monthly chart, they've moved up. And that really is very important. And it says we've got to watch this real closely. And we're going to have to watch inflation. Oh, I'm going to get into that as we move along. Let me just finish the numbers. Silver had a catch-up session. Is having a catch-up session. It's having a fabulous move. It's at 15.70. Basically, what we're looking at, 15.70, 76, somewhere around there. This is a really good move. And now we might be seeing a little bit of tiredness maybe in the gold contract. Maybe silver catches up. we'll be watching it closely. So what we did for my opening call is we grabbed a vehicle that has crude oil, and it has gold, and it has, look at this, soybeans. And look at the move in soy. Look, soybeans, beautiful move to the upside, up 1.56%. It has wheat. So this is, I'm talking crude, but I'm talking a blend. May I use that term? And here we are. Wheat is coming off the low. This is really good action in the daily. Weekly needs a little catching up. And I love what I'm seeing. And to go to the USO, because I always get calls about that and questions. Let me just quickly refresh my over here. While that's refreshing, I'll go back here. The USO has extended leg C. We had a half a position long at 9.16 and is now trading at 9.30. Now we got stopped out for a small loss, but it was a loss, and that's upsetting. So my thinking here was the dollar, which was pulling back and has now come back a little bit from the slide, is down 25 cents at 97.33. Now, it's really important about this. It made a peak D. The way the weekly was looking and the way it was holding the other day looked to me like we could have touched that trend line. But instead, once we made the peak D and we had these 2 days where it was 1 day down and looked like yesterday, when I did my report early in the morning, my Traders Corner, the final chart that goes out when I send out my 4, 5, 6, 7, 8, 9 charts, whatever it is a day, the Traders Corner is where we have our positions. And that's where I decided the best thing was that there would be a catch-up in the commodities. And the way I would play the commodities would be to get this blend. And as a result, the blend is up very nicely today, very nicely yesterday after we got in, or 2 days ago, I can't even remember now, at the low. And what's happened is it's running really nicely from the $12.79 entry, I believe it is, to where we are right now at 13.04. That's a very nice 1.5 day, whatever, I can't remember. Yeah, it's a 1.5 day rally. And the reason I did that is because I missed the move in gold. We did have the IAU, that's 1/10 the price of gold, which trades, the GLD, which trades at 1/10 the price of the spot gold. And we had, I can't remember now. And I can't remember when we got stopped out for a tiny loss or a tiny gain, whatever it is, we got stopped out. I never got back in. And look at the move that it's had since then. It went to a high today of 12.37. So I figured if I'm missing it, and the risk reward seemed to me that no matter how I analyze it, gold should come back to the middle of this trading range. So there'll be another opportunity to look at it. So why get in for a quick pop to the upside when it's going to come back? I think it's going to come back down to the entry point. So instead, we've got this vehicle because it has the catch-up area of oil, soy, wheat. I like that. So here we go. I thought I'd also do something else today. I wanted to show you some of the chart. I don't know how else I can explain it. It just sounds silly to give you levels in my opening call, my daily report that I send out every single day. Let me just find this here. What I do is very comprehensive look at the markets. I'll show you what I do. I start off with this. Actually, when we come back, we don't have time. I'm going to show you what I do. I do a daily analysis of the markets. And I start off with the daily Dow with the Chapman Wave methodology. I'll be back. The Dow's up 84, S&P's up 10. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back. Just wanted to show the E-minis right here. The 10-minute made a peak F-top right there after that spike early in the morning, and then the market came tumbling down. So the E-minis went to 2002.25, then plummeted below the 200-period exponential moving average in the 10-minute chart at 1984, round number low. Then it went to peak A, and now it's making leg B, and it should go to a C and a D. This is outstanding action. Let's see. I'm going to do a couple of things. First, I'm going to go to just quickly. AKS was a question. I had an email. Yes, AKS is in that category of the steels. They are doing fantastically. Something's going on in this rotational correction that says money is flowing into the heavy-duty cyclicals. I'll be back with that question as well as what I'm going to talk about in a moment. We're going to go to Ben in Tallahassee. Ben, how are you?
Very good, Basil. How are you?
I'm well, thank you.
Great. Well, I've been keeping a close look at that IBB over the last week, and that thing's really been a dog. I thought, boy, if there's one area to really focus on and maybe throw a short in, that could be it. What are your thoughts?
Okay, so here's the question. The IBB is the iShares of the NASDAQ Biotech ETF. If you're looking at the charts, folks, on the left here is the daily. I'm going to make it a little bit bigger. We don't need that stuff on the left there. Here in the middle is the weekly. Let me make that also a little bit bigger. And what's really important about these charts is that you can see that it isn't just the chart, but in the analysis, one has to consider whether something is in or whether it's out. Oh, that brings me to politics, and I'm not going to do that. I don't have time for it. But in the IBB, it actually does take me to politics in a way, because there is a political contingent here that says that the whole aspect, as soon as we get into the idea of the biotechs and pricing of the medications, this is where the IBB is falling down. So the question I had recently was, why are you still short the IBB from 399 when in fact, 393, when in fact the high was 400.79, just off the high, and here you are still short, even though it's gone all the way down to 240 and it's bouncing. And my answer isn't just the chart, which you can see in the monthly chart, that it is just looking technically terrible in the monthly chart. A big test here with that left side, a support of 247 back in October of 2014. We went under it. We went to 240.03, and now there's a bounce, but we haven't even taken out last month's high yet. This is just the first week of the new month. But what's really important is that what we've been trying to do in my opening call is we've been playing the BIB, which is 2 times long. So my thinking is I have a target of the 222-ish area, which is 207 is the low of April of 2014. So somewhere between 200 in the 220s to the 200 area, that'll be where I'll have to make a decision, because a rally from that area could really be very substantial, and it might not come back down again to test that for a long time. That's my thinking. So we've remained short, and at the same time, we keep trying to play the BIB. We just got stopped out of the BIB, which we got in. Let me just give you the figures. We got in just recently for the second time, or not said many times we've been in. This was at 39.92, and today we got stopped out at 41.64. So that's about a 2 point, just under a 2 point gain. And we might do that again, except for one thing. Your idea of shorting, I'm absolutely concurring with the concept that that any instrument that fails under these circumstances to participate in the rally has got a real problem. I mean, that's the way you're looking at it, right?
Yeah, mute there. No, absolutely. You know, these have been some pretty incredible rallies from the bottom, and if you look at what the IBB has done, it's been
it's a dog.
Quick.
Yeah, it's just terrible. So this is my thinking. I would wait to short, even though the idea is that it's the weakest link here. I would wait just a little longer. I think within a couple of days, I'm going to get a signal that's going to say, this is the short-term or near-term sell signal that's going to be the big test of whether now are we going to go down due to cycles and a whole bunch of things. Are we going to go down back to the Dow as 16,300s and then the 15,900s, etc.? Or is it just going to be a breather as the cyclical rotation kicks in and creates a huge level of support because of the makeup of all the different indices? And that's going to be a big decision for me. So I'm going to say to you, you could theoretically start right now. What would you do? Would you buy the BIS, or would you actually short the IBB?
I think my strategy would be to go in thirds on the BIS.
Okay. So then here's my thinking. Let me go to the BIS, which is 2 times, where did it go? It's right there. BIS is the ProShares Ultra Short NASDAQ Biotech. It's an ETF. And we've had this at various times, but this is one of those vehicles that if you're going to use like a one-third entry position, you might not get to your one. You hopefully don't get to your third position because it's doing so well. That third position for me is always the tough one. Why? Because in the third position, if you're wrong, now you've got 3 positions underwater. So let me, if you don't mind, I want to think this through. I'm going to say to you, maybe you've got a choice of waiting a day or two, but I'll tell you why. The IBB.
Keep in mind, I like you put on pretty tight stops, so it's not like I let it go down 50% and keep buying.
That's all I want. I thought so, but I just wanted to get that out because there are a lot of people listening with different perspectives.
Right.
The MACD has rallied so strongly, and the stochastics at 83%, and the darn thing has gone from 240 to 264. Yep. That's a 10, 11% rally. That's nothing. This is one of those things in the old days. If the market was up from the low, if the Dow was up, say 12%, the IBB would be up 36%, something like that. That was the ratio. So this is really, really poor action. So I'm going to make the suggestion that you might be a day or two early. Today was the day that it should have tried for a leg C. That's why I made I kept the stop fairly tight. It should have made a leg D above 269.79. It's only at 48 cents up. It's really looking very poor. I'm going to suggest to you that you actually start your position here, knowing very well that it's the first entry point and that you really would like it to get closer to the 269 to 268.50 to 270.50 area. that's really what you would want. But there's a chance that if the market pulls back on Monday, I've got this signal saying there could be some kind of a pullback in the morning, that if the market actually pulls back, you'll start to make money in your BIS. And that's going to help you to decide where to enter a second position. Why? Because if the BIS goes to 259 and then tries to rally and can't go above the 9-period moving average of 260, and then starts to pull back again, you could add your second position. So let's do this again. You get your position now. The stop I would use, well, at this point, you really have to say, I don't want to stop until it actually rallies towards the 268.5, 270.5 area. So that's the first position. And then maybe Tuesday we'll look at it again. Okay?
That sounds great, Basil. Thanks a lot. Have a great weekend.
You too, Ben. Thank you very much for calling. The Dow's up 73, S&P's at 9, and we'll come back. We'll talk about my portfolio for subscribers.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Okay, so here we are. So in my Traders Corner, we have a variety of things. I actually look at stocks where they're under $1. I actually look at them if they're $300. It doesn't matter to me. It depends on what's happening and what I think suits the character and the makeup of subscribers, as well as what I'm looking at. I know some people for months have been talking about defensive stocks, and others are talking about the commodities and oil, etc. So I try to have a blend. So this is what we're looking at. We've been long since actually January the 20th. We switched from short to long in the Dow. And we had a very nice gain. We took a gain and then had to get back in, and now we are long again. The 3 times long ultra long Dow, and it's trading at 59.58, and our last entry was at 55.55. So that's doing nicely. My target has been in the Dow INDU was this 200 period exponential moving average of 17,040s, I believe it is. It's being covered up right there, 40s. And the high today so far is 17,039. So we've almost achieved that particular target, right? MACD is still very good. Stochastic's way up at 97%. That is fantastic. And the longer it holds in the mid-90s, the longer this rally goes. But when it comes down from being in the 95% area, watch out, you can get a very sharp pullback. But look at the weekly chart. Look at this beautiful V-shaped turn with a little hairpin at the bottom, tweezer bottom. I love this. It's talk about it in a moment. I want to go on with our story. So that was good. We took a profit in our BIB. As I said before, we were in, and we took a profit right there today. It's coming back a bit. We were in 39, I don't know, 39.78, and we took a profit at 41. What did I say it was? These numbers I keep having to do. 41.64. Okay, so that's that, and it should bounce, and but it's really acting very poorly. We'll be back again maybe. I'm holding the short position. Why? Because the IBB, I just discussed it a moment ago with Ben in Tallahassee. This is a horrible chart formation, and I would have had to make a big decision if, in fact, the normal thing in the biotechs was to go from the low of 240. Right now, theoretically, it should be at 285. It should really be at 300. It should be maybe even challenging the 312 orange color 200 period moving average. It's way down here. This is just terrible action. So it's the unfavored area. That's really what you want to do. Do I buy? Do I sell? Do I stay away? And this is an area where I'd be looking to short or stay away. That's the best thing. Now let's just do the next thing. I don't want to discuss what we have, but the blend that I got of the commodity area is now 1312. We bought it just a day or so ago at 1979, I think it was. Okay, so that's doing what we wanted. Why? Because look, there you go. You've got the different commodities are starting to move, and I like that. Where is USO right now? USO is at 950, up 25 cents, up 2.74. So we aren't going to be able to participate to the same extent, but we've got the trend of the commodity index itself. That's important to me. The next thing is, then we have a silly little stock. Actually, I'm not going to mention it now because it doesn't trade, hardly trade with volume. If it does trade, it's just a purely speculative, tiny little position that we have, and it'll be back in fashion at one point. So I'm leaving it for now. Telephone. I wanted something that subscribers asked for. They said, we want a defensive stock, and the defensive stocks were very poor earlier in the year, last year. Then all of a sudden they started to come on strong. So we bought in the $34 area, we bought Telephone, and it's trading now $37.97, but it's got the dividend. We had Verizon, we took the dividend out of that, then we got stopped out for a gain. But now we're holding Telephone. It's in leg C in the daily, leg E in the weekly with a Chapman wave cup and ladle breakout with the left side, right side price breakout. That's good. Monthly chart is really the only thing that just keeps me from getting nervous, because that monthly chart says in this cup formation, there's always a really good chance that if you start to make the right side turn in a cup formation and your MACD and stochastic are behaving exactly the way they should, there's a good chance, especially with this inverted Chapman wave Roman candle, that if any week you close in the midpoint of this particular candle of May of last year, so that would be at 38.22, there's a real good chance you're going to test the previous high, in this case, the round number high of 39, made in April of 2013. That gives me a little bit of comfort here to say, in this environment, I feel strongly that the action recently of Telephone and Verizon, look at VZ, we do not have it anymore. We did get the dividend from it. Verizon is still in leg C as well. Very nice action. This is the pure dividend play, but it seems to me that they are fitting the category of meeting the criteria that you want. Capital gain plus some kind of a dividend that is way better than what you would get in other sources. So in this case, I can't remember offhand, 3.8 or something like that. I can't remember. So that's the dividend stock there. Now I'm going to mention something, probably shouldn't because it's a kiss of death here, this particular one. We've got a stock, a copper stock, TGB. We got in a position at 0.35. It's at 0.45 now. It's about a 29% gain. I love the action. I say I shouldn't mention it for two reasons. One is it's such a slow price stock that it could easily move back down 20 cents before it goes up another 20 cents. So I'm kind of vulnerable now to my, but I needed to show you just to show you how I like to go about things. So we've got a stock from 0.35, and yet we also bought something at, and we short something from 393, and we are long, stocks that are in the, we're not afraid to be long stocks that are expensive or inexpensive. So that's what I wanted to show there. And one other thing, we're in Twitter. We're in Twitter. It's trading at 20.21. We're in at $15.80, added at $17.55, and it's trading at 20. So it's a huge gain. Now it's getting a little bit, leg C is still acting very well. It's that monthly, it's a weekly and monthly charts that say to me, hey, a lot has to happen before, thank you, T yields 5%, okay. 5%, that's a nice yield. So Twitter, trading at 20.20 up 89 cents, is acting superbly here off the bottom. But believe me, that monthly chart is scary. A lot of work has to be done until it gets over the 9-period moving average in the monthly chart of 24.56. This is just a bounce, but it's a nice percentage bounce. So that's what we're looking at. And I forgot something here. But in the meantime, I just wanted to give you a sense of at least what I like to do, what I'm doing, why we're doing it. And yes, there are risks sometimes, and I do take risks. There's a very, very conservative aspect, and sometimes there's a wild side. We haven't done anything wild for a little while, but occasionally we do that, and we'll see. And that wild it could be options, it could be just a real quick play. It depends. So I wanted to go through this just to give you a sense in the Traders Corner, what we're looking at in my opening call, why we do it, what we're looking for, and now I'm going to talk about the resistance levels coming up right here in the various indices and how the strong IWM is a very big positive at this particular point, even though there's a resistance.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Had a question about when I get to, let's see, the Trin. Trin has been saying to sell a low number and SPX is still rallying. Are there times to ignore the Trin? No, this is for the next day, the next session. So whatever it is, my indication says that whatever the Dow does today and however the futures are on Sunday night, even if they're high, even if on Monday morning they're high, by the time the market is open, at some point very early on, the Dow should go negative. That's what it says. So it's a real good indicator. It's got the accuracy rate. It could fail, but the accuracy rate has just been unbelievable for years now. And the only one that's a little difficult to interpret is when I get one that says within 2 days, there should be a very strong rally within the futures that's 7 to 9 points higher, sometimes 9 to 11 points higher, which should be interpreted by the cash indexes very positively. But that can come from a low. It's just to warn you that you've got to be careful. There could be a very sharp rally. That's different to those days that just go down, 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 down. So it's just a real nice indicator. So I wanted to show bonds right here. 160.53 on the daily is the level of support. And we're at 161 and 21 30 but that's the only one. Below that, let me just check. So the 10-minute doesn't show any support, and the 120-minute chart has broken the support. No, it's just touching 161.79. It's just broken it, and 161.95 are the numbers there. They don't. It doesn't do it in fractions. It does it in fractions. Doesn't do it in ticks. So that's very important. Now, what's really important about the upside? Look at this. This is the ESH 16. This is the March contract still. And you see all that resistance there, 2003.33, 1998.75 in the daily, 2002.80 to 1998 in the 10-minute chart. We went way above the 120-minute chart, which means that the levels now of 1985, 1987 become support levels. They were resistance. So this is very important because you're starting to get a lot of areas of resistance. Here's the E-mini. Look at the Dow. INDU, it's saying right here at 17,000, first of all, 16,937, then 17,102, 17,175, 17,399. It's like a magnet. It's saying you're wanting to go there, but there's a lot of resistance in this area. So as soon as you get there, you got to be real careful. And 17,064 in the 10-minute, and the high today was 17,000. Exactly right. 17. Let me just double check here. The high today is 17,039. So you can see why I'm saying that we're getting to an area where there should be some resistance. Means that we might either have a high level consolidation, or this is going to be the test. That's why I wanted to show these things in my Traders Corner in our positions, because all of them are in leg C, D's, maybe even an E, and we're getting real close to some kind of resistance. How they pull back is going to be very important. So I wanted to show that. I wanted to show also the IWM. IWM is trading at 107.95. Where do I get these numbers from? I get these numbers, they derive from a formula that I gave to Herb, who used to do a lot of work for me in terms of the technical analysis and TradeStation. And I gave him the parameters of what I wanted him to look at. And these are the numbers that were derived from levels of resistance and levels of support that I wanted to target. And you can see the IWM. Now let me go to the white background chart. You see the IWM right here. This is still leg C. It's an amazing C. In fact, it barely had an excuse for one day pullback for B, and then it went to C. Look at that C. It's gone from 93.64, rallies to peak B on the 22nd at 102.01, and then the next day, 2 days later, it breaks out, and it's gone from that level to 107.95 right now. And that's very positive action, and it's turned the MACD in the weekly chart almost crossed positive. It hasn't crossed positive yet, but I love to see this sort of thing. And it says to me that not only are we getting buying from fund managers who have missed out completely, for the last 3 days, we're starting to see every time there's been a decline, there's been buying coming in. And that tells me we're getting to an overbought level, besides which I have a couple of indicators within this that are saying to me, be a little bit careful in the short term. Now, if I look at the on-balance volume, the blue line here, you can see that blue line is in leg D in the daily. That's the on-balance volume. The relative strength index is very strong right there, that gray line. I think you can see, let me see the chart. Where am I? Yep, I can see it. You can see it. Right there. And I think what I'm looking at here is if the on-balance volume this time is going to fail to go over 80%, it's not, how can I explain this? It doesn't have a right side index, so I don't see the numbers. I've made it so that it fits the formula of the stochastic, and I can put it inside. So I've had to sacrifice putting in a number on the right side. But at this particular point, the MACD is, where is it? MACD, slow K. 99, no, wrong one. Why am I not getting that? There it is. Okay. Overboard. Oh, I'm sorry. I can't find it. It's there. Oh, there it is. 141,982. Yeah, that doesn't tell you anything. It's just an on-balance volume is where on an up day, the price gets, the volume gets added to the previous day. On a down day, it gets subtracted, and it's a running total. So everybody will have a different one if they start the on-balance volume in a different place. But it's looking very good. Can I get to 111.89, the RUT 2000? I don't know. That's tough. That's way up there, 111.89. That's another 4 points. But in the meantime, I'm looking at just on the shorter term basis, you're getting to a level. Let me look at the 120-minute chart. So this is brand new A, B, C, D, E. Leg E. You see, a lot of the indicators that I'm looking at are suggesting on a shorter term basis, we're getting rather overbought. Yes, but on the monthly basis, the channel on the IWM, I was going to get to the longer term. Thanks for bringing it up. I would have forgotten. You see this? We are now underneath. Former support becomes, remember, I've been talking about this since I'm here about technical analysis. Whenever you're looking at former support and that support gets broken, it becomes resistance. And here we are. We're underneath the inside track. And that makes that 110, 111 area really important because it's got all the way to go to 113 to break back into the channel nicely. The MACD is turning a little bit flat, but it's still not good. And the stochastic's got a chance here, 30% to cross positive. But what's really important, look at this chart. We'll do a little bit of the long term here as well. So let's go back to the SPY. It was last week, Friday, I believe, that we were looking at the SPY. I was talking about this beautiful trend line, that orangey red trend line. Look how the prices of these wicks touched and then sprang upward. And now for the first time since January, since January, where we broke down, is on the upside is the 9-period exponential moving average of the SPY, the S&P 500 depository receipts trades exactly in proportion to the S&P 500 index. It's right on the 9-period moving average, but we've only had a few days of March. You can't extrapolate that and say, whoa, fantastic, this is brilliant. No, it's a monthly chart. You've got to wait until the end of the month. All you can say is right now, as of this second, at, at 11:50 on Friday Eastern Time, it looks good. We want to go to the weekly chart, and we'll talk about that when we get back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. Don't forget your swimming lesson coming up and all the other shows. So let me just review quickly. The SLX, remember we've spoken about this for a while. I can't believe that I never got in. I kept talking about it. I never got back in. We missed the boat there. It's at $23.93. It's up $1.47. That's the silver. That's the Market Vector Steel Index. So I was asked about AKS. AKS is acting. Disappeared. AKS. Uh-oh. I just did something wrong. Oh, AKS, right it is. AKS looks great. Now, is this a situation where, like the biotechs and like the in 1999 to 2000, you had the high-tech stocks, and you just had to buy them and close your eyes and say, "Yeah, this is oh, it made a new high. Oh, it made a new high. Oh, it made." I don't know. My thinking here is that, on a very short-term basis, Barron's and all these other papers will come out over the weekend and talk about the fantastic move in the steels, in the commodities, etc. So you might have Monday, might have even Tuesday. So I have a couple of questions sent to me. Is this time to buy say EWZ. So EWZ is in the commodity area. It's Brazil. It's the Brazil ETF. And it is trading at, it's just gapped up on a Friday to leg E to the 200-period exponential moving average. If you had to ask me, there's no way I would buy it here. I would love to buy a pullback, but there's something that you can plan on doing based on the weekly chart. You could nibble at 25.08. But it's just a starter position to say, hey, I want to get a feel for what this does. I'm prepared to take a 10% loss on this stock because I need to get a feel. And you might even get taken out for 10%. I personally would hold off. I think you will get an entry sometime Wednesday, Thursday of next week, maybe Friday in the 23s. So no, I would, as a conservative measure, I'd say no. But as a longer-term move, if this is a longer-term move, you can buy it at 25.06 if it's going to go to 26 or 27 or 28. So that's what you got to think about. Timing-wise, I'd prefer to hold back. Bob asks, FXI and EEM, same category. You see, this rotation is really important to keep in mind. This is a strong leg up. I think it might even have recycled. EEM is the emerging markets ETF. I think it's going to go to 34.10. It's at 32.78. That's the 200-period moving average. I'd prefer to pull back, let it pull back to 32. It'll probably do that sometime next week. But there again, if you think that the monthly chart is actually improving for the first time, take a tiny position. Look at the steel stocks. Look at X. X is, remember we had the caller just the other day, Anna? I said, yes, and if it gets to 11:34, you're going to have to make a decision. You've got to take something off or you're going to raise your stop. Well, she's back not only to even, she's looking great if she kept most of her position. She took some off because that was the discipline that she needed, and now the rest is moving at 14. Is leg D somewhere where you want to be careful of? I'd say yes. I think it's going to be coming back next week, maybe into the 1230 to 1180 area. But fabulous move up. It's telling us something. Look at the VIX index. The VIX index is now down at 16.30 in this double Eiffel Tower pattern. It looks to me like there could be a little bit of a bounce. But if the VIX at 16.30 starts to trade next week in the 15s or lower, this market will go higher. So my parameters are real easy. We're just going to raise the stops on our positions, like that great entry point we've got in the Dow and in other areas, and just let the stops take us out. But if you've just gotten into the market in certain areas that you hadn't been in before, like we have now with this commodity ETN that we got that has a whole mix, I have to call it a position that is a starter position regardless, because this is the first big break it's had. It could pull back very easily, but that's the way I'm looking at it. A rotational market. It's been a rotating recession, a rolling recession, and now you've got the big guys, the heavy duties coming back. Look at Caterpillar. Unbelievable move. I'll be back on Monday. Have a fantastic weekend. Sign up for my opening call. I'm going to have a lot of charts this weekend. Had some really nice positions, 28% gains in a couple. I'll be back on Monday. Have a great weekend.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.